Hello students, in our previous session we have seen how to post journal entries and after that how to prepare ledger. Now in journal, if you remember, we have done something known as opening entry. Now opening entry is nothing but in the question they will give us some balances of assets and liabilities. Now for those assets and liabilities, first we have to do is that we have to find out we have to pass journal entries for those opening accounts or opening entry, and then we have to continue our journal entries of other transactions. Now in ledger also we have to see how those ledger accounts will get affected by those opening entry. Now for this I have taken illustration number 2. Okay, now let us see. In question number 2 they have given some balances that is appearing in the ledger of Mrs. MS Marble Traders on 1st April. Okay, we have cash in hand, cash at bank, bills receivable, then Ramesh credit is nothing but liability, then stock goods means assets. You have to understand which you have to think clearly which one will be asset and which one will be liability. So bills payable is liability, then Rahul debit is Rahul debit will be assets and Himanshu debit will be assets. Now for this opening entry, okay, first we will pass one journal entry. Here is the journal entry. We have cash account, cash at bank, that is bank account, then bills receivable account, then stock. Rahul and Himanshu, we will write their balances given as per the question in debit side. Then we had two items of liabilities, that is to Ramesh account, to bills payable, then we have 3000 and 2000. Similar like easily we can see that debit side is much more than liability side. So what we will do is that we will add up all the debit amounts and we will deduct this 5000 from the amount of assets. So the balancing figure will be known as to capital account as 45,100. Okay, now this is how you are supposed to do opening entry in journal. Okay, see, after adding all the assets we got 50,100 and on liability side we have 3,000 and 2,000, that is 5,000. So in order to match both the sides, both debit and credit, we have to add balancing figure in the liability side of rupees 45,100. Now what effect this will do in ledger, let us see. Now first you have to do is that you see all the items in debit and credit of opening entry, you prepare ledger accounts of that. Okay, here is the ledger account. Now see, the first item of our asset was cash account, then second was bank account, then third was bill receivable, then stock account, then Rahul, then Himanshu. Okay, first prepare your ledger accounts for all this account. Okay, the next what you have to do is that, see, on the debit side we have 6 items. All of these are showing debit balances. Okay, so what we will do is that we will write on the debit side as to balance brought down, and amount will be same as like cash account is having 6,000, so we will write the 6,000 in here. Okay, then next bank account, it is showing debit balance of 12,000, so what we will do is that in bank account we will write on the debit side to balance brought down 12,000. Then next we have bills receivable account, it is showing debit balance of 7,000, so what we will do is that we will write on the debit side as to balance brought down rupees 7,000. Then next we have stock account showing debit balance of 1,400, so stock account we will write in here to balance brought down rupees 5,400. Then next we have Rahul account showing debit balance of 9,700, so Rahul account, where is it? Here, Rahul account, on the debit side we will write to balance brought down 9,700. And at last we have Himanshu showing debit balance of 10,000, so in Himanshu's account we will write on the debit side to balance brought down of 10,000. Remember, this balance brought down will be on April 1st, first day of the month. Then next on the credit side we have Ramesh account showing credit balance of 3,000. So Ramesh account, since it is showing credit balance, we will write on the credit side by balance brought down rupees 3,000. Then next credit account we have bills payable account showing credit balance of 2000. So we will write bills payable account on the credit side by balance brought down rupees 2000. Okay, simple. Then next we have another balancing figure account, that is capital account showing credit balance of 45,100. So we will write on the credit side balance brought down 45,100. Simple. And the remaining entries, or after passing all this opening entry, you have to write down, or you have to start passing journal entries for these transactions, and then according to those transactions you have to prepare ledger accounts. So in this session I have just selected how to explain how to deal with opening entry. Means earlier we saw in journal chapter how to pass journal entries for opening entry, but in this session we have seen how this opening entry will be treated while preparing ledger accounts. Okay, so for this session we will wind up here. Thank you.